Stocks on Wall Street and lower on Monday, largely dragged by sell-off in tech stocks. The S&P 500 pulled back from its record highs, while the Nasdaq and Dow Jones shared 0.5%. Asian markets opened largely lower, tracking weak cues from the Wall Street. Nikkei down over 100 points, while Kospi remains at the flat line. GIFT Nifty is suggesting a flat start with a negative bias for the Indian market. Precious metals retreat sharply, with silver and platinum falling from record highs hits earlier in the session, while gold is down almost 5% from its peak. Crude oil prices move higher on dented peace hopes in Ukraine tensions as well as in Yemen. Financial Services Secretary expects insurance premium to decline after Parliament passes a bill following 100% FDI in the sector. Says insurance regulator will release draft rules on agent commission. Adds this is not the appropriate time for composite license or open architecture. And Russian Foreign Minister Sergei Lavrov claims one of the President Putin's home in northern Russia was attacked by Ukraine, but President Zelensky describes the accusation as lies, says this is a complete fabrication intended to justify additional attacks against Ukraine. This comes with Ukraine hoping for an improved U.S. security offer to end the war. Hello, good morning. You're tuned into Power Breakfast on CNBC TV 18 and I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Looking at the US markets closing in the red, Asian markets too have opened up in the red. Most of them are trading with cuts in today's trading session or with a negative bias. Except Hang Seng, that's just flip-flopping between the red and the green. Slight bit of a positive bias, at least for the Hang Seng. But apart from that, whether you look at the Taiwan index, whether you look at the Kospi, the Nikkei, all of them are trading with cuts. Even ASX 200, that's the Australian index, that's trading with cuts of around 0.03%. So negative bias is what we're seeing coming in for most of the Asian markets. Let's look at the Nifty implied open. Last three trading sessions, the Indian markets have closed in the red. Today seems like we're opening up with a bit of a negative bias. As of now, 21-point downtick is what we're watching out for. Do not forget, obviously, today is the expiry day as well. So that will be important to watch out for in terms of the move or the volatility that we see coming in. But as of now, Nifty implied open is indicating a bit of a negative start for the Indian markets. But how is all this going to be impacting our markets in terms of important stocks, the cues in the world of FNO? To set you up for trade, we have a team of research joining us for that. First up, we have Vivek, who's here to tell us what are the important cues that we're keeping an eye out on this morning. Good morning, Vivek.
Morning. As you rightly pointed out, a bit of a subdued start is what we're anticipating. Very muted handover coming in from the U.S. markets. On the other hand, Brent prices actually rose close to 1.7%, closer to the $61.6 a barrel mark. Now, the key story yesterday was the kind of correction that we saw across most of the commodities. Gold, silver prices corrected quite sharply and significantly off their intraday highs as well. Now, coming to Indian markets, like you mentioned, continue to remain weak. Remember, today is the December FNO series expiry. Quite a few inclusions as well as exclusions. Nifty then ended below the 26,000 level. Broader markets fell in line with the benchmarks, and the market breadth clearly was in favor of the declines. In terms of the individual sectors that we were tracking, metal stocks did not hold on to the gains on the back of the correction in the base metal prices as well as commodity prices. You did see some selling pressure emerge over there. Railway stocks saw significant profit booking after the rally they saw last week, and EMS stocks, Dixon especially, was in focus. These stocks continue to correct, and most of them are down significantly from their recent peaks. Key events and key market reactions. Remember, yesterday the IIP data, the industrial production data, was quite strong. In fact, it was the strongest data that you saw for November in the last 2 years. Expiry today. Asian markets, GIFT Nifty, all indicating a subdued soft start for our markets today.
Okay, Vivek, thank you so much for that. But let's move on and go across to Upasna, who's here to tell us which are the important stocks that one should be keeping an eye out on. Good morning.
Well, good morning, Vinny. First up, let me start with Reliance Industries. Now, there was a Reuters report titled as India claims $30 billion from the company, and the company has stated that this is factually incorrect. Next up is Lupin on our radar. It has signed exclusive licensing, supply and distribution agreement for a GLP-1 drug. An agreement is with the China-based Gan and Lee Pharmaceuticals for bonflaglutide, which is mainly for type 2 diabetes. BEL also in focus as it has received additional orders worth 569 crores since the last disclosure on 12th of December. Next up is RVNL. The company has received orders worth 200 crores from East Coast Railway. Shriram Finance also in focus on the back of credit rating revision. Now, CARE has upgraded the credit rating for NCDs and debt worth 2,500 crore from CARE AA stable to CARE AAA plus stable. Now, Bandhan Bank also in focus as the company says that the sale of identified NPA and rights of portfolios to its ARC company. Pari Engineering is the next step on our radar. The arm sets up 2 solar inverter manufacturing facility with annual capacity of 1.5 gigawatt each, totaling and taking it to about 3.05 gigawatt in Gujarat. And also, the company's CEO has resigned with effect from May 15, 2026. Next up is Afcons Infra. The company offers to complete CIDCO water tunnel project ahead of schedule, is what the company has indicated. Next up is Indian Overseas Bank. The company gets approval from RBI to set up IFSC banking unit in the GIFT City, Gujarat. And lastly, coming to Timex Group, as informed yesterday as well, the Timex Group luxury watches BV has exercised its oversubscription option, hence this stock will also remain in focus today. So all in all, we are watching out for all these stocks in today's trading session.
Okay, thank you so much for that, Upasna. But what's going to be happening in the world of F&O, what we should be keeping an eye out on? Sudarshan is here for that. Good morning, Sudarshan. While we didn't manage to close above the 26,000 levels, today is expiry. What are these important cues that we should watch out for now?
Good morning, Vinny. So it's the last expiry of 2025, or say December 2025, and we are set to welcome 2026. And look at Nifty. It's trying to hold or protect the levels of 26,000. So it would be good for market, it would be good for us that we enter 2026 with Nifty at least crossing the level or protecting the level of 26,000. And that looks tough if you go by the options data, because there's a huge call writing between 26,000 to 26,200. Yesterday, we would have seen a bigger fall if it was not Bank Nifty. While Bank Nifty closed in the red, but we got a minor support from them, and relatively Nifty Bank outperformed all the frontline indices. Silver lining in this market is the put-call ratio. While it has been slipping further and currently it's at 0.68, but normally when it's in the range of 0.60 to 0.68 or 69, then we call it oversold zone. So if there is any positive news related to peace agreement between US and Ukraine and Russia, or any other positive news coming in from the domestic market, there will be short covering, and that short covering can be very sharp. Now coming to the options data. For Nifty on the call side, major call writing, as I told you, was seen for 26,000 as well as for 26,100, and for both these call options, we saw premium falling. While on the put side, the most active options were 25,900 and 25,850. 25,850 is going to be a major support for Nifty. Coming to Nifty Bank, on the call side, 59,000 and on the put side, 58,500 were the most active ones. Now, in the index futures, we saw FIs continue to sell. Yesterday, we saw selling of almost 1,710 crore. But as I told you, Nifty Bank provided the support, and that's the reason we saw minor buying in Nifty Bank futures, and that buying was just 65 crore. Now, if you talk about the positioning, long exposure has seen a minor increase to 14% because there's an addition of more than 9,000 contracts. But look at the short side. There was addition of more than 25,000 contracts, and now on the short side, exposure is around 86%. So support, Nifty, first support, I'll look around 25,900, that is the 50-day moving average. Resistance would be again Friday's intraday high of 26,140. Buying will return only when we cross that level, and next resistance comes around the record high of 26,325. For Nifty Bank, support would be 58,730, that is 50-day moving average, and resistance would be around 59,230, that is 20-day moving average. One stock remains in the band, as usual, is the Saman Capital. Two stocks I'll keep an eye on. First, Dixon Technology continue to see a fall. All the EMS stocks have been under pressure, but this stock has yesterday closed below 12,000 after several months. Another stock I'll keep an eye on, Hindustan Zinc, after sharp fall we have seen in both silver as well as zinc prices overnight.
Okay, Sudarshan, thank you so much for that. I'm going to be surely keeping an eye out on the 26,000 level. Want to start 2026 with 26,000? Who wouldn't mind that? But thanks so much for the points there for in the world of FNO, Sudarshan. On that note, we are actually going to move on and talk about Reliance Industries. Now, Reliance Industries has strongly denied reports claiming that the Indian government has made a $30 billion compensation demand against the company and its partner BP. Now, in an exchange filing, the conglomerate said that the report was factually incorrect and based on the unnamed sources. Reliance stated that the actual government claim related to the KG D6 block stands at around $247 million, which has already been disclosed in its financial statements. Reliance added that the company and BP have complied with all contractual obligations and the matter remains before the courts. Moving on, the Financial Service Secretary M. Nagaraju expects insurance premia to come down on the back of the government passing a bill that allows 100% FDI in the sector. My colleague Sapna interviewed him and she began by asking him how the year has been for the insurance sector and what we can expect going forward. Listen in.
We expect the premiums also should not increase, in fact should lower down. And there could be better products meeting the different needs of the population in the country. The best practices of the world and technology adoption is possible with the allowing of 100% insurance, 100% FDI in the insurance sector.
Right. So, two things over here. First, you indicated very clearly that at least the premier rates should not go up, right? So, I mean, what is the reading on that front as of now, and how do you ensure that that doesn't really happen? And second, sir, 100% FDI. So, is there a possibility of some kind of consolidation in the sector, in the coming year or over the next 2 to 3 odd years? And any company waiting in the wings to basically, set up shop here? Any big global major that we can talk about?
There are many global players who have shown keen interest to increase their existing investments in the insurance sector and also to expand. We can't hazard a guess now what would be the level of interest, because they will take their own decisions based on the market conditions and the returns. But having said this, most of the global players are interested to do insurance business in India because we are one of the largest, one of the most performing country in the insurance sector. And both the density and penetration have been going up and we have great potential. So, insurance industry looks at India as the next opportunity for investment.
Okay. So, you mentioned a lot of them are actually waiting in the wings, so to speak. So, any indication because if you look at the numbers at the moment, like only 4 of the, companies are at 74% FDI, the rest are at lower levels. The numbers are all there in the public. Out of 74 insurers, around 40 of them is what we're talking about.
Yeah.
So, can you give us a sense at this point in time that, how many of them, 2, 3, 4, 5,
See,
or what? How many of them would be interested in stepping up their stake?
See, insurance...
And anyone for 100% as of now, if there's a signal.
Insurance is not that there are many players in the thing. The global players are very few. Okay, we want them, those global players who are available, let's say, in Europe and America, they should also have their own insurance subsidiary companies. In India,
a broad question on the banking sector. So, as 2025 draws to a close, we are walking into 2026 now. PSBs have been doing pretty well. What's the kind of roadmap? Very broad, very briefly, if you can kind of share your thoughts on that. 3 to 4 major takeaways that you would expect from your PSBs in 2026.
CD ratio, of course, we are doing well, except 1 or 2 banks in 1 or 2 states. Most of the states, our CD ratio is actually very healthy. In fact, some of the banks or securities have gone more than touching almost 80%. Ushna. So that way we are very well doing well. The banks are doing well. We want them to lend more, ensure they follow the prudent underwriting principles to approve the loans, and also ensure the loans are monitored very well, and recovery is done as per time, so that as a banking industry will support the growth of the economy and the country and everyone.
Right. No worries on the deposit front?
No, we don't have worries on the deposit front.
Okay, that was an interesting chat there. But on that note, we're going to step into a very short break. We'll get to all the Trump-related developments in a special segment, Trump Watch, on the other side. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Let's talk about the U.S. markets. Wall Street ended lower, driven by sell-off in the tech names. S&P 500 post back-to-back losses, while the tech-heavy Nasdaq was down 0.5% in the trading session. Big AI names such as Nvidia also took a beating, falling around 1%. And now the market is awaiting the Fed minutes, which is due later tonight. So that will be important to watch out for in the U.S. markets. Let's also listen into Jeremy Siegel on the market outlook and the Mag 7 rally going into 2026.
No, it's been predicted for a long time because the streak of the Mag 7 is really quite unprecedented. But, next year, I think S&P, which is very weighted towards, of course, the tech and Mag 7, might be less than double digits, 5 to 10, still good. Then the non-Mag 7 could be 10 to 15, with a Mag 7 finally positive, but in the low single digits. Now, of course, it's very difficult to make one-year estimates, but that would be a turnaround, certainly from the last 3 years, but still leading to a very good market in 2026. So I think a lot of good headwinds, good tailwinds pushing forward.
Now, getting you the latest update on Trump-related developments, let's go across to our Trump Watch segment. Starting up, President Donald Trump praised his meeting with the Israeli Prime Minister Benjamin Netanyahu on the Gaza ceasefire plan, while acknowledging West Bank disagreements and gave Hamas a short window to disarm. President Trump said that Israel has fully complied with his Gaza peace plan, but noted the difference that they were seeing on that front. Now, also, Netanyahu announced a plan to award President Trump with the Israel Prize, Israel's highest culture honor, stating no American president has done more for Israel than President Trump. And following the meeting with the Ukrainian President Volodymyr Zelensky, Trump held a positive call with Putin and expressed anger over an alleged Ukrainian attack on Putin's residence. He said that I don't like it, it's not good, and I learned about it from President Putin and I was very angry about it. While also noting claims about this, Zelensky said that this is false, but let's listen in to what were the words that came in there.
Yeah, I don't like it. It's not good. I heard about it this morning. You know who told me about it? President Putin told me about it. Early in the morning, he said he was attacked. That's no good. That's no good. Russian officials. Don't forget, the Tomahawks. I stopped the Tomahawks. I didn't want that. Because we're talking about, it's a delicate period of time. This is not the right time. It's one thing to be offensive, because they're offensive. It's another thing to attack his house. It's not the right time to do any of that. and can't do it. And I learned about it from President Putin today. I was very angry about it. It came out, well, we'll find out. I mean, you're saying maybe the attack didn't take place. It's possible too, I guess. But President Putin told me this morning it did.
Also, President Trump provided very little details in terms on the operation that took out a big facility in Venezuela last week without confirming U.S. military involvement. Moving on from Venezuela, on the Iran front, he threatened U.S. strikes over its missile build-up, saying that I hope they are not trying to build up again, because if they are, we are going to have no choice but very quickly to eradicate that build-up. And now to end with what the latest comments came in for a Federal Reserve's chairman, Jerome Powell. President Trump said, calling him a fool and reiterating his desire to fire him if he wanted to.
We're thinking about bringing a suit against Powell for incompetence, because think of it, these aren't outstanding buildings, these are small buildings. He's at $4 billion more. It's going to end up costing more than $4 billion. $4 billion. It's the highest price of construction. Again, Democrats, highest price of construction per square foot in the history of the world. There's never been. Gorgeous monuments are built for a much smaller price. So we're thinking about bringing a gross incompetence, what's called gross incompetence lawsuit. It's gross incompetence against Powell. And it was his baby. And the guy's just incompetent. I mean, there's nothing you can do about it. He's just a very incompetent man. But we're going to probably bring a lawsuit against him.
Okay, that was the Trump Watch segment for today. But on that note, we're going to slip into a very short break. We'll get to the cues in the world of commodities after the break. Welcome back to Power Breakfast on CNBC TV 18. Now let's go across to Manisha, who's here to give us the latest update in terms of gold, silver prices, what's happening in the world of commodities. Good morning, Manisha. And seems like silver and gold, at least some fall coming in from those highest levels.
Well, yes, absolutely. Some profit taking, something that the markets absolutely needed and wanted. So, yes, we have it. Gold prices saw a 4% decline in the overnight markets. We've seen an all-time high of $45.50. We are trading at $43.50 right now. So $200 shaved off in a matter of 24 hours there. Investors have locked in profits after those record highs. And then the street also seems to be hearing positives when it comes to Russia-Ukraine peace deal progress. And that has led to some decline as well. Same is the case with silver. It gained by 10% on Friday, and it's seen a profit taking of 9% on Monday. Well, silver even then is on track with 156% of gains for this current year. Same is the case with copper as well. We saw the prices gain to an all-time highs. It still is up 8% on a month-on-month basis, but overnight copper also has seen 2% of a decline. And then it was platinum, 12% of a profit taking in the overnight markets. But remember, all of these commodities made record highs in very thin holiday trading days. So some profit taking before the year end is exactly what you're getting.
Okay, some profit taking before the year end is what we're seeing coming in for some of these metal names, gold, silver, platinum as well. But with that, we're absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Up next, a Bazaar Morning Call.